As the economy erodes, governments are trying to fill in the void. They can do this by creating work, infrastructure, bridges to nowhere, ghost cities, if they want to simply maintain the current standards and have only the elite class feel any benefits. They print money. Public works and unnecessary activity is obviously not beneficial to the majority, but in comparison, printing money is just horrific. It just makes the divide worse and worse. But what is the response from everyone? Do more, do more. They say it because they don't know the truth. And that's why you came here for the truth. So let me unveil that for you. This is what we've got to talk about. Printing money. All the central banks are doing it. They're expanding it. There is one way, shape, or form, some sort of stimulus going on in basically every country today. I am going to talk about Australia, New Zealand, Canada. I think I had the UK in here. I've got Toronto specifically. We are looking at so many different factors, a lot of information to cover. I want to begin right away. The Bank of England has announced a new 100 billion stimulus package for the UK economy amid fears of a surge in unemployment in Britain's hotels, restaurants, and shops following the end of the government's furlough scheme in the autumn. This is, of course, something that we are noticing in other places around the world. And what do? They put in a stimulus package. Now, whether or not that's actually going to work, we'll see. But 100 usually becomes 200, usually becomes 300, and so on. And ultimately, what's going to happen is that there will be an increase in taxation on the people. I understand this is what they are doing to support the individual. But when you look at it, now think about it like this. You pump in this money from the top, like a funnel, and that's the $100 billion. And then you, at the bottom over here, by the time it gets to you, it's nothing but crumbs. This is what government is. It's that funnel action, and it never ends up being what they put in at the top. That's just the way it is. You can look at it, break it down, and understand that truly, no matter where you look around the world, it's the same situation. This is just some further information regarding that and why they went ahead and did this. UK economic recovery stuttered in October. The PMI reports sluggish activity as businesses hit by tightening restrictions. This is going on all over the place in that previous article and in here. They basically give you the numbers if you want to know. It's the same thing. We see that essentially in most countries around. There had been a huge fall, as you saw, and not just the PMIs, but basically every single indicator. And then there was some sort of resurgence. Some things have come up significantly, but other things kind of remain sluggish, as they say. So it depends on where you look. But this is the time now that we could have different shapes, whether it's the M recovery or some say it's the K, depending on how you look at it, because of course stocks have gone up, but real wages have really suffered at this time. And you look at the PMIs, they did surge up, but many have started to come back down. I cover all information here on this channel, but this is just giving you an idea of what's been happening in general around the world. I'm not sure if I included this when the information came out, so I wanted to put it here in this video very quickly. Bank of Canada will maintain current level of policy rate until inflation objective is achieved, recalibrates its quantitative easing program. So I'm not sure what I touched on if I did in a previous video, but essentially they're at a historic low right now. Today, as you can see, it's the same thing all around the world. As you know, all of them are down to zero or just about, and some are actually lower. And essentially what they're doing apparently is that they're going to do the whole taper system, which we have seen other central banks try to do but never actually do successfully. They are tapering, but they're buying these longer dated bonds to sort of help out where you see, and I say help in quotes, help out the economy in a way whereby they can actually help interest rates be reduced. And that's what they mean by help, because they need interest rates to go down so that people can buy more homes, particularly in Canada, where that's literally the only industry left. I will touch on Toronto specifically in just a second, but just wanted to show you what's happening with the other central banks right now. And I'm looking at the Reserve Bank of New Zealand. In its QE auction schedule for next week, the Reserve Bank of New Zealand signaled or revealed a slight taper. They will buy a little bit less of the bonds. We'll see what happens. But as they say here, the BOC, the Bank of Canada, announced a bigger 20% taper in bond purchases, but sought to offset the quantity effect by extending the duration of its purchases. So we'll see what happens essentially, but we know that they are right here expected to cut interest rates below zero from April 2021 and could announce other action at its November policy meeting in a fortnight. RBNZ is easily the most dovish of the major economy universe, but with much of the anticipated change telegraphed in advance, derivative, bond, and currency traders have already taken a 0.75 rate cut all the way to the bank. We're going to see what they do, what they decide to do, and the actions they take, and I will update you here on this channel. If you are from New Zealand or happen to know anything, obviously put them in the comments. We all need to know. My friends in Australia, check out this information if you haven't been informed about it already. The RBA has cut interest rates to a historic low of 0.1% and will pursue more aggressive quantitative easing. I know that you knew this was coming, but it has happened. They didn't put it to 0%, they put it to 0.1%, giving them just a little bit of breathing room. The scale of Australia's bond buying spree is closing in on the Feds, if you can believe it or not, because the RBA's balance sheet to almost triple. Can you believe that right now? There aren't too many central banks who have done that. The Federal Reserve, since late last year when they began the repo operations, had expanded their balance sheet of approximately two times, and now RBA doing so at a rate of 3x. So we're going to see what happens here in the next little while, but they are certainly going haywire. Now you look at the total quantity of cash. Okay, I understand, but certainly when we take it as a percentage of the GDP, it is quite significant. And you look at it compared to where it was a year ago, it is also significant. So we have to take it for what it is. Connected in with that information, I found this to be interesting, wanted to bring it to you. China-Australia relations, import ban on Australian copper, sugar expected after blocks on lobster, timber, and barley. So we got a little tit for tat. We got some battles that are happening, and it is just, really critical timing right now that we have seen. And this is unfortunate because with the economy being down, we don't need more things being piled up on top of that, but certainly that's where we're headed. And it's not just the US and China. We are seeing, of course, Australia dealing with their own situation here. Europe's got issues with the US and other countries as well. And it's just interesting to see it all being happening right now during such an economic contraction. Home prices in Canada's largest housing market climbed to yet another all-time high last month as red-hot activity in the detached property market offset a condo market that turned south. You could see here homes selling price right now, average selling price in the Greater Toronto area climbed to $968,000. It is insane, but that's nearly a 14% increase from a year earlier. There's absolutely no justification for what's happening right here. You can use any excuse you want. Absolutely any excuse, and it is not good enough to explain how ridiculous the prices are in Toronto. Just another stat, Toronto home sales rise 25% year over year, breaking October record. This is completely unjustified, and you see what's happening, of course, just like in many cities that we have noted, New York, San Francisco, and others, where people are getting out of those major condensed urban areas and moving into more rural environments. The same thing is happening here in Toronto, but also we are just seeing individuals moving out of the core and into the suburbs. This here just wanted to mention the fact that the condo market specifically in downtown has definitely taken a hit, the rental market taking a hit, just like we have seen in many other major cities around the world. With nearly 99.9% of people talking about the optimism of the Toronto real estate market, there are very few that are starting to speak out about it and how ridiculous it is and unjustified it is. You get little tidbits every so often. One individual from CIBC talked about how this optimism won't last too long. He says that many people are taking advantage of the low interest rates during the most housing-friendly recession ever. Even the governor of the Bank of Canada is telling us, listen, don't expect any growth basically over the next 6 months. The party's over. You can't have a 0% increase in the economy with the housing market continuing to boom. But what I would just suggest and interject right here is that essentially the very last thing that's left in the economy of Canada is real estate. So many jobs focus around real estate and building a non-stop supply of houses, condos, townhouses, and so on. Doesn't matter where they are, doesn't matter the condition, doesn't matter how small they are ready to be built. And it doesn't matter if they're empty, you just got to make them look like they're not empty because that can't show up on the statistics. And of course, you see that more and more and more. There is not optimism, but I would say euphoria that's taking place just like you see with tech stocks in the US. Jumbo and FHA mortgage rates set record lows, juicing refinance demand. You will see this continuation, this trend, of course, as the interest rates get lower. More and more people will take advantage of it. There's no doubt about it. And when you have rates that are essentially encouraging people to take on debt, I assure you they will. I just want to point this out really quickly. Big tech lobby spend Q3 of 2020. A lot of people don't understand why this is the case. Oh, we need to take care of this company. You know, it's Apple, it's Amazon. They're too powerful. They're too this, too that. Look at how much money that these companies are spending, and it breaks it down by year, by quarter. Looking at all of this information, and then you're trying to see why they can and cannot do certain things. This particular company, Amazon, spent a quarterly record $4.65 million in the third quarter of 2020 on just lobbying. You look at it back last year, they spent $16.79 million. That's just lobbying. That's directly information you can find here. They give you the breakdown of the other tech companies, but this is just showing you the revolving door, showing you the power and how much are able to get away with. And that's the case right here. You could see it for yourself. In some unusual and potentially positive news, Walmart lays off shelf scanning robots for humans. And I didn't read that backwards, and it's not a typo. They got rid of the robots and they brought in some humans. They didn't like the way this was going, and they thought the perception by the customer wouldn't be so good, so they turned that around. We'll see if that's a continued trend. It certainly doesn't appear to be, but I want to bring it to you, and I think I'm going to end the video there. If you found it informative, hit that thumbs up button. By clicking one button, you support me. I want to thank you for that. If you are looking into e-commerce, you want to know how to sell stuff online, I've got a free e-course for you. It's available at the amazongps.com. Do you want to understand the financial system from top to bottom, A to Z? You don't know where to start. You want to know, but it's so difficult. It's complex. Well, I've got the information you need in these two books. I highly recommend checking out the link in the description to see them for yourself. If you want the audiobook instead, you can get that at themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? A lot of good detail. Definitely want to check it out. Click it. I'll see you there.